Hello everyone, welcome to this morning's webinar session for the Forex market. I think I got my words around the wrong way, so apologies about that. And apologies, audio was started slightly later than we anticipated. So thank you so much for your patience and for waiting for us. But before we start, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Okay. Let's crack on straight away. I've got MT45. If I just pull that down and bring over what's happening in the markets generally. In fact, I've got a nice little setup coming up on the Euro Aussie, and I'll talk through that when we get to the charts directly, because as I said, I just want to have a quick look around the news and what's been happening generally with the markets, which means I have to bring up my other browser over here. So as I said, I've got actually MT4. David, I think, has got the I think he's got everything. He's got TradingView. I think he's got Ninja, and I think he's got Tradestation. I think he's also going to talk to you a little bit about what he's been doing with his dollar trades this week. So I'll leave him to fill you in on that. Looking around just to see what, in terms of news, really isn't very much. We've had already, this piece of news from New Zealand, which are the inflation expectations. So they came in quite a lot higher. And if you've looked at your CSI this morning, you'll see that there's been some pretty heavy buying of the Kiwi, and it's we look at these commodity currencies obviously for sentiment, and certainly it's, I would say, holding up. That in terms of, and when I say holding up, we really tend to focus on the US indices. I mean, the you know, the headline at investing.com says the stock futures are edging lower, but that may be so, and that will certainly have a local impact. But in terms of market sentiment, and when we mean by global market sentiment, you know, the US, rightly or wrongly, is what happens in the indices, the futures that kind of drive, you know, will be at the forefront, if you like, of that sentiment. So the US 30 is ticking higher. I think the NASDAQ is ticking higher as well. Yes, it's up 50 points, which is you know, pretty nice at the moment, although I think it sort of looks like it's coming. Was that yesterday? Let me see. Sometimes this investing.com, I find, sometimes doesn't update, so just refresh your browser. Yeah, there it is. That was yesterday. It went up. It sold off a little bit towards the end, and we can see here the NASDAQ obviously approaching yet another high. You know, somebody actually wrote, is it, are we looking at a double top, or are we looking for a breakout? And as we've mentioned before, next week, once Thanksgiving is over, we're into the rundown to Christmas and Santa's rally. Markets like to be terribly positive going into the end of year. There's a lot of window dressing, a lot of bonuses are paid at the end of this year, so obviously, you know, you want to get as much money as possible. There's all sorts of factors, but we all have to remember what happened in 2018 and interest rates are also what are driving currencies higher, as we have seen with the British pound, in as much that you know, there is is the BOE actually going to raise interest rates this side of Christmas or next side of Christmas? So we have two drivers. We've got the interest rates narrative. We've also got the sentiment driver as well, and it's combined really well in the Kiwi. Those of you who are on our program will know exactly what I'm talking about. This relationship between the different capital markets, the correlation that you have to understand to help you find a good solid trading opportunity. The last one, just to have a look on sentiment, is actually the Kospi. It's a bit of not many traders know about this index. it's hugely volatile, but it's a great one for picking up what's been happening over in Asia. I mean, obviously the Nikkei as well, but the Kospi recently has just been a really good barometer. I mean, it sold off the previous overnight, and you know, you've got this little sort of the candle with a wick to the bottom, obviously signaling a buying coming in. But as I said, generally it is pretty fragile. And that fragility is trying to hold on until we get to the end of the year. Now, so let's see what's happening on the Euro Aussie. Before that, just quickly have a look at the CSI, my hourly CSI matrix, and also daily dollar. You probably can't see this, but this is actually a sort of shooting star on the daily chart of the index. As I said, David was long dollar in a number of pairs, and in fact, when we saw that come in, it was really, although it came in mid-session, those of you who have the dollar index, it came in mid-session, and we looked at it, and we looked at what the indices were trying to do. This holding up of sentiment, as it were. I think that's when you decided to close out, didn't you, David? Yeah, he decided, right, he had that really nice run up in the and he was buying dollar. He thought, right, that's it, let's close out. And in fact, it's been proved to be a really good exit decision. What have we got here? This is just the hourly. Obviously, we've had buying in the Aussie, buying in the Kiwi for the reasons that I've given, and it's nice to see actually the safe havens all pointing in the same direction this time. We've got selling of the yen, we've got selling of the Swiss franc, and we've also got selling of the dollar, which is really what we want to see. We want to see this consistency, which we haven't seen so very much of. So why the Euro Aussie? Let's have a look. In fact, I did look at the Euro Kiwi, but it didn't seem to, it wasn't such a really nice setup. And this is my profile for Euro Aussie. It is on the back of a strong update yesterday, as we can see here. It's also, it pulled back on the R3. Volume price analysis, again, those of you who read the books, those of you who are on the program, and those of you who come along regularly will know there are the 5 elements of VPA. That's the price action, volume, support and resistance, candles, candle patterns, and time frames. Will know that David and I mark on our charts price-based support and resistance using the Camarilla and the proprietary indicators that we have developed. Those of you who have them, fine. If you don't, you obviously be looking at something like, I don't know, a Fibonacci. You might even use the moving averages. And we also use the Camarilla levels, which kind of acts as like Fibonacci. There are certain levels which act as points, price points, where certainly the price action will pause. It may even reverse, and they can also act as price objectives. You can use them for placing your stops. There's you know, you can use them in a multitude of different ways. And the key thing about the daily ones, the levels that we have on the daily chart, is that these levels are in play for the rest of the week. So this S3 level, that the Euro Aussie, it kind of bounced off the 6th level. Our Camarilla has 6 values. Most people just use 4. We've gone to 6. It kind of came into this area, bounced off, got to the 3rd level, did try and get through, but is actually although it did close above it, which was a positive, it kind of pulled back on the S2. They're actually quite close together. So it's a strongish level of price-based resistance. And now it came off that. This is the little, you know, see this little wick to the bottom of this candle. But because we've had 2 kind of bullish days, as it were, the setup of the daily chart for the Euro Aussie, it looks much more likely to deliver a potential trade to the upside based on the kind of correction that we've had on the daily chart. If I'm not going to go to the Euro New Zealand, but you can go and look at it yourself, it's very, very different. It's a different setup on the daily chart. These values, as I said, are there for the rest of the week. They appear on the hourly up to the daily. The weekly ones are valid for the rest of the month, and the intraday ones are all the time frames, including the Renko chart, up to the hour, up to but not including the hourly. So it's a really very flexible, very sophisticated indicator, and I can't give you any sort of, people say, well, have you back tested it, have you done this, have you done that? No, it's first of all, we don't, David and I have a very strong views about back testing and its limitations, but you can, there are the observational, you look at your charts. As I explained yesterday in the stock session, the way you learn this system, the best way is you start with just a chart with price action and volume on a faster time frame, and you look for those little bits of price action that teach you these signals, and you say, and once you get comfortable with that particular signal, then you go to another combination of candles and price action, and you build up your knowledge that way. You add to your knowledge all the time. But the support and resistance is such a huge part of VPA. Then you add on, you say, well, how are you going to mark it? Well, you can do it manually, of course you can, or you can use what's out there in as standard indicators or proprietary indicators, as we have here. We also use volume-based price support and resistance, and that comes off the volume point of control. The volume point of control is this area of the chart where there has been a degree of transacted volume. In other words, there has been price agreement, to use market profile, a market profile term. There's been no clear direction. And it's a congestion phase. A congestion phase is where trends actually develop, and we can see here a classic one on the daily chart for this pair. We have this congestion. It's a bit like a distribution curve. You have these bulges, and that bulge here was at its deepest. You can see here the number of times it tried to break to the downside, it didn't try to break to the upside, and then back again, and then we've got this massive trend, lower. The thing, a lot of traders don't like congestion phases. They don't like looking for breakouts and breakaways, because you do have, it won't happen the first time, it may not even happen the second or the third time. So you either have to be very patient, and then you would use your volume and the candles, the candle patterns you can see here. The interesting thing about this, if you look at this attempt to move higher, all the candles had, well, most of them had wicks to the top. So that of itself would have told you, it's going to go some, but maybe not as far, because each of those candles had an inherent weakness in it. They were selling as part of that price action. When it broke to the downside, which is what you want, you can see the wicks to the tops of the candles, which is what you want to see, certainly at the beginning of the move, and where you have lots of volume underneath it. This is on the daily chart, but you would use this same narrative on any other time frame. The other thing about looking for breakaways, breakouts from congestion is, where do you place your stop loss? And your stop loss is always likely to be very, very, very tight. So yeah, it may not work out, and you may have to, you may be stopped out, but at the same time, your losses are going to be quite small. And when you do get a trend, boy, you really do get a trend. So you make up for it on the fact that you will get a very, very strong move. So we've had this trend lower. Then this is this, if you say this is our primary trend, this is our secondary trend. But again, you know, we had a big up candle here, not a massive amount of volume. We look at benchmarking, but as always with markets, they can carry on higher. You know, you have this overrun. David, you know, he came up with this analogy of a tanker. When you've had such a strong move lower, and it is a strong move, you know, any reversal, it's going to go, but it's going to take time. You know, it's going to take time to reverse, and then when it gets going again, it needs to sort of pick up that momentum once again. It didn't really get very far, and you know, the primary trend appeared here to have been resumed. However, what are we? I'm intraday. You know, this is interesting. It gives me the context of what's happening on the faster time frame. These two candles here, that candle from yesterday, yeah, we've got a reasonable amount of volume. So, but because of where it is on the in terms of price-based resistance, with support and resistance, you know, you could almost expect a little pullback, which is what we have at the moment. But I'm, you know, looking at my other indicators at the moment, it's showing that, you know, based on the past 2 days, I'm only interested, as I said, in a very short. I'm not going to be in this for very long. So whilst this is interesting, I'm really looking at where the price is at the moment in terms of levels. You know, what are my other indicators showing me? Is the euro now being bought? The euro has actually had a huge sell-off. Those of you who are euro traders, you know, it's still sort of bearish, but so I am kind of going counter to the general mood towards the euro. In fact, if we go up to the daily chart, let's have a look here. Yeah, I mean, it's right at the bottom of the daily. You can see here it's had attempts to rise, then it's keeled back over again. Where are we on the hour? In fact, the hourly chart expresses it even more. These are all the attempts that it's had to move higher, and it's been, you know, successful, and then again push back higher once again. So the euro has been quite generally selling off, and it's about interest rates again, because Lagarde keeps saying no, you know, the narrative around interest rate, well, it's only temporary, yes, but we think, but the ECB have great difficulty in you know, are they going to, they should, from strictly economic terms, be looking at raising interest rates, but they've got enough problems with all the countries in places like Italy, Spain, etc., who've got huge debts and are being supported by the ECB. But no one can say that, you know. Whereas central banks such as the BOE, even the Fed, the New Zealand, the Aussie, yeah, if they're going to, they've got more, their hands are not so tied, because as we all know, the euro is a very political currency. Yes, you have to understand the economics of surrounding the euro and what is happening in economic terms, but boy oh boy, you really do have to understand what the politics are, because that's really what drives the euro, hence the huge sell-off. Right, I've actually moved down to the 15-minute chart. The matrix shows me the relative position of the euro pairs, which ones are moving higher, which ones are, you know, are they all moving en bloc? And you know, Euro New Zealand has got a bit of a catch up to do, but I explained that, and if you have a look at the daily chart, you will see it is so bearish. So it's got a bit of a struggle. Euro CAD, I haven't got the Euro CAD, I'm looking at the Euro Aussie, but I suspect it'd be very similar to Euro. Euro Aussie was round about the position 20. It's sort of creeping at the moment, so possibly Euro CAD has you know, taken off a little bit more strongly. And what I've done is, with the CSI, you can actually, you know, toggle on and off the indicators just to give you a clearer view. And because these are all commodity, we're looking at a commodity currency, it's always useful to see against which of these three it is, you know, it is best performing. We've actually got a cross on the euro CAD, which tells me the move was from this point to that point. So that's underway. But the reason I looked at this one, because I actually caught it at a point where it was in development, and I wanted to just talk very, very quickly through it, and then I'll pass it over to David. So what are we looking at here? We've got the CSI here. We can see the euro has been moving strongly. We know it's moving strongly in terms of its matrix, well, certainly against the dollar, the Canadian, against the pound. But as I said, I looked at the euro Aussie because I want the setup in my 5 chart profile had all these little lessons that I wanted to you to see. I've got a Renko. I've got a 5-minute chart, I've got a 15-minute chart, I've got an hour, and obviously I've got the daily. We've talked about the daily. We've got a wick to the bottom of this candle. We're at the S3 level. We know it can be a pause point. It can be a point where it goes into congestion. But looking at the faster charts, we can actually see, if you don't have a Renko, what would you see on the 5-minute chart? Well, this is the move lower. This is actually a break lower. First of all, from the volume point of control on this chart, but also the S3. And this is what I mean by the R3, the 3rd level. It did actually break through, and then you had a retest. And you look at the volume underneath those 2 candles. It's, first of all, it's got a wick to the top of the candle, so we know if we didn't have the R3, we'd know there'd be some weakness coming in. And also with volume and price action, you have to look at where it is happening, particularly if it hits this a key level, like, as I said, the R3. And in fact, it did. It just retested it. By the time that that candle formed, we had a pivot, which is also telling us it's bearish. And this is the move lower that we've had. So now we're looking at a reversal. I mean, we often say, are you a reversal trader, or do you like to trade breakouts, or do you simply look at a chart? So forget what's happening here. You would look at this chart and you say, well, it looks like a breakaway trade is setting up. I know what happens in a breakaway, so this is a breakaway opportunity. Now we're looking at a reversal opportunity. Where are we seeing the reversal? Well, first of all, we have a 2-bar reversal. What's interesting, it is also at a volume support. It's also at a price-based support. The 2-bar reversals they're one of these candle patterns that I don't know why, but in Forex, they work really, really well. They work on all charts, but they seem to work particularly well in the Forex market. So we have this first signal. We have a 2-bar reversal. That isn't really a 2-bar reversal, but if you put that if you overlay those 2 candles, you have got a wick to the bottom of that candle. I would say this is much, much stronger because the wick is much deeper. You've also got a lot of volume under. You've got a lot of volume under that down candle. Yes, I accept you've got rising volume, but it hits these again support and resistance. Then you have this one coming in, and you have this really nice 2-bar reversal. You think, okay, well, I've got this 2-bar reversal. The next question is, where is it going to go? Your levels then tell you if it's going to pause, it is going to pause at these key levels. So that's on the time chart. You've also got your trend dots, and you've got your trend monitor, which is more considered than the trend dot. It goes into this in between color, and this is where you as a trader have to decide how aggressive you're going to be. Some traders will say, great, a 2-bar reversal, I'm going to take a speculative move. I think I'm happy to take that, and I'm happy to possibly take the move from here to here. If you're going to be a bit more conservative, you'd say, no, I'm going to wait till it goes beyond the S3. And you can see here it actually retested it. You think, no, that hasn't changed to a bright blue. And I know I'm going to wait for a bright blue. So there are 3 potential points depending on how you feel as a trader. Because you have to have a sense of comfort when you take a trade. But this is where certainly the Renko would certainly help, because first of all, it takes away all the kind of noise that you get in the time charts, and it's very straightforward of the Renko. What we look for is a match of dot color with the trend monitor color, and I would say at least 3, maybe 4. Now it's interesting here on the Renko that the more conservative entry is actually at the S3. So you could actually say, so while the entry was seen, potential entry was on this 2-bar reversal. And also if you look back here on the 15-minute, we actually have it's not quite a hammer because it's got the body of the candle. A hammer candle, I always think, has to have a very narrow body, but you've got obviously buying coming in here because you've got a wick to the bottom of the candle, again around the S3. Now the question is where is this going? Where is it, where is this likely to go? The only issue I have with this trade is the fact that it's heading straight for the S3 on the hourly chart, and support and resistance on slower time frames they trump, they carry a lot more weight. So as I said, a nice little move, but we could see this pause here at the S3, which we're kind of seeing. It's just, we just have to accept it and wait. We are coming to a very busy time with the London market. We then go back to our CSI. The euro is still being bought. Aussie isn't what we want to see. A really nice sharp angles on the lines of the CSI. You have a sharp angle on the euro. Clearly, euro CAD is, it's motoring ahead. You've got euro dollar as well, but I will wait and see, simply because I know it was going to be the S3 here. We've seen it on the daily. It did punch through yesterday, so that gives us a little bit of confidence. But we are expecting, a pause point, maybe a little bit of congestion. The Renko will keep you in the sense that it will say, right, it will hold, it will absorb the noise that maybe is going on in the faster timeframes. In terms of short term targets, if you like, objectives, well, clearly the S3, it's not a hugely important level, but it is a level that you would be looking, where you would expect a pause point on this time frame. But as I said, it also is, we have the S3 up here. But an interesting little look at how what the indicators are showing, the VPA, and also the different elements of VPA, candle patterns, and support and resistance.
Morning, everybody. Hopefully you can hear me. Hopefully you can see my screen. Just looking behind me. Yep, good, excellent. Where to start? Lots going on as usual. I've got 3 platforms. This is Ninja. I've got Tradestation down here at the bottom, which is that one. And I've got TradingView over on the right-hand side. I just wanted to start with this because, as many of you know, we've been working on NinjaTrader. That work carries on. We're doing a lot of bug fixing. In the previous versions, there were minor things to change. We've also started to update things, and this is one of the updates that's on the NinjaTrader platform. You've probably seen it on TradingView, but we've now added it onto this is the currency matrix, and we've now got this nomenclature at the top, which gives you a sense of what the average is on the matrix in terms of a value. So the average here on the 1 minute is 4.4 and the highest is 6.3. So it gives you that, it's the same principle as we've got on the currency strength indicator, where you've got the overbought and oversold regions at 80-20 or 70-30 or 80-20, whatever. It just gives you a benchmark against which to judge the strength of the move and whether the currency pairs on this occasion are at an important key level where they've been at a high level, or have they got some way to go? And you can see here the euro pound is 6.75, the highest is 15.45, and the average is 9.6. So, you know, there is a little bit of a way to go yet before that gets to an average or even indeed a high. And the same actually across all four of them. You can see this is 19.8 against 22. So the question we've had many times over the years is, well, you know, what do the numbers mean? When do I know when I'm at an extreme? And that's the reason we incorporated it, and we're rolling it out. I think it's on Tradestation. I can't remember from memory. I think it is. It's certainly on TradingView, and now it'll be on NinjaTrader once we release all these. We're also working, I'll show you the tick speedometer in a minute as well, but we're also working on the market analyzer. So we've done a lot of cleaning up on the indicators. Now we're working on incorporating them across into market analyzer. Just to take a look at what's going on at the moment, because it's quite interesting. If we isolate out on the dollar, there's a really strong move going on at the moment in terms of euro. So if I just click on the euro, you can see what's going on. Very strong, lots of euro buying this morning, but it's not so strong against euro dollar. And it's important to realize if we isolate out again on the dollar, you can see here euro dollar should be down here somewhere. If the flow of buying or selling a currency is universal, then you would expect to see all the pairs stacked up in the correct order. With the dollar as the primary currency here, these should be moving up to the top, but certainly euro dollar, which is mid-water, it's starting to trickle down, but it should be down the bottom here with the others. In other words, this is all heavy buying of dollar at the moment on this particular time frame on 5 minute. So if you're trading euro dollar right now, the point is that you're not actually trading with the universal sentiment towards the dollar. You are trading with universal sentiment towards the euro. In other words, what is driving that move for euro dollar in isolation is very much the strength of buying for the euro, and it's not so much to do with the selling of the dollar. It has an effect, but it's certainly nothing like the strength of effect that you're seeing down here on these other three. So when you do the analysis like that, this is what you're trying to unpick all the time and unravel is, you know, where is the strength? What is the driver? Am I trading with the universal sentiment? Am I paddling my canoe against it, which is absolutely fine. You'll see it all the time because you get a piece of local fundamental news comes out, and that particular currency will move in one direction and it may well be counter to whatever the rest of the market is doing. It's just a fact of life, just have to accept it. But that's what we're doing on the matrix. So I just wanted to show you that and also just highlight, you know, using the matrix. And remember, the currency matrix is very much a scalping tool, a scalping indicator. Whether you're on a 1 minute, 5, 10, 15 minute, whatever here, it is because it's looking at a relatively short period in terms of look back. It is looking back over 7 bars on this one on the default. You can change that yourself. But when you contrast it to the currency array, you've got to remember the currency array, where is it? Here we go. The currency array is taking a much longer term perspective because the look back period is much greater. So what you're seeing on the array is the analogy or the way to understand it is that I explained it in this way, that for those of you familiar with the trends indicator and the trend monitor, the trends indicator works very close to the price action and therefore signals reversals, congestion and everything else very quickly. The trend monitor does not, because it takes a longer term view of the changes in trend and therefore does not change so frequently. And it's exactly the same with the currency array. That's the way to think of it. That's the way to use them. They are two sister indicators, if you like, but they work over very different time horizons. The currency matrix is very close to the market. The currency array takes a much further look back over the market. Just click that back on again. Right, let's just pull over, let's go to the multiple workspaces and I'll pull over the, there we go. Let's pull that up on there. I've got cable up here. There was a nice trap move on cable. It rushed up prior to the open, and then whack, everyone got caught as they normally do. I hope you're not one of them. It's so easy, so profitable for the market makers. They do it every single morning. In fact, I think one morning they didn't, last week maybe, I can't remember now. But generally speaking, it's a very profitable time of the day for them, as indeed is the rest of the day, but particularly at market open for London, particularly at crossover sessions, particularly at the London fix, and all those sorts of times, and rollover as well. If you've ever watched price action at rollover, which is 10 p.m. UK time, 5 p.m. US time, the volatility that occurs there is extreme. If you've got a 4, 5, 6 pip stop loss and you're trading through that, I can guarantee you'll get stopped out. Sure as eggs are eggs, absolutely guarantee it. This is on the 4 indices. For top left is the pound. So this was the trap move running into London, and it's now reversing off that. The second one on the right hand side is the yen index, not doing a huge, it's sort of ticking down sideways, sort of mildly bearish, I would say, on that particular chart. This is the dollar. This is what's been going on the dollar on 5, selling off into the London Open, and now there's some mild dollar buying coming in, which is why we're seeing those moves. And finally, this is the euro. This is the strength you're seeing on the euro buying that I highlighted, and you know that's what's driving, if you like, this pair, this combination here. You've got the dollar and the euro. The dollar is attempting to rise. The euro is rising strongly. So yes, there is a move in euro dollar, but it's certainly nothing like the strength of move that you would see in something like cable, where you've got pound falling strongly, and the dollar, the euro, in euro pound, for example, where you're looking at these two, where you would see the pound, the pound selling off strongly, and the euro rising strongly. So if you looked at, I don't need to look at a euro pound chart to tell you, there's a strong move going on there right now, certainly on this particular time frame at any rate. So that's where we are in terms of the indices. Just very quickly to show you, Anna mentioned the little account. If you remember, this is the little account that we started with $800 and something, 825 or something, I think it was at the front end of the year. And I said I was looking to try and double that by the end of the year. Last week, I think it was around 1420. We've managed to add another 24, another 200 pips or so this week. So we're up to 1448 on it. And that was basically a dollar basket. And when you're trading baskets, you know, the one thing we explain in the program, you've got to close them all out together. It's very, very tempting to cherry pick and think, okay, well, now let me pick off these profitable ones and I'll leave the losers because I'm sure they'll turn around in due course. It's so easy to do. It is the emotional decision that you want to make. Just close them all out. Just to give you an example, I had, I think, 6 pairs running on this. Cable never actually got into profit, so that went out as a loss. The pairs that were very profitable were dollar Swiss, euro dollar was very profitable, dollar CAD less so, Aussie dollar less so, and what was the other one I had? I can't remember now. Dollar Swiss was very profitable. So it was a question of, yeah, some of them were very, very profitable, others were less profitable, and I think one, particularly cable, was in loss. But you close them all out, and overall you net whatever it was, 20, 23, 24 dollars, 240 odd pips, whatever. What it also shows you is that two things. First of all is finding a consistency, finding something you're comfortable with, finding something that works for you. Not everyone's comfortable trading baskets. It means putting on multiple trades. It means scaling in. I scale in, you can scale out, of course. I scale in because I like to be to get into something that has some historic aspect to it. In other words, I'm basing my next decision on the fact that I've seen something positive happening rather than scaling out, which is you're basing it on the premise of nothing. You have no information. You're making an assumption that you are right. It's, again, fairly nuanced, I suppose, but you've got to find out what works for you. If you're not comfortable scaling out, then you've got to learn how to scale in. and you've got to be confident in scaling in, building a position in the market, and then making decisions to come out. The decision, as Anna's explained, the decision to come out on that basket was pretty straightforward, looking at the daily dollar index, because you've got to remember these positions were held over 3-4 days. I think they run over the weekend. I think they went on last Thursday maybe. Held them over the weekend and then closed them out. So they were on for maybe 5 days in total, something like that. So you're looking at a much slower perspective. I'm not interested in, intraday, 5-minute, all the rest of it, although this is a 5-minute chart up here. But the second aspect to it is the fact that you can actually make money with a very small account. It's not going to change your life, but it does prove that if you have a very simple tactical approach, very straightforward, you limit your risk, you don't go mad, and I'm just trading micro lots here. I'm not trading mini lots. This is micro lots, so maybe from 1, 2, 3, 4 micro lots, whatever it is, and that is it just gives you that view of how to make money in this business. It is about finding what you are comfortable with, finding out what works for you, what timescales you're comfortable with, and everything else, and obviously using the indicators in conjunction with that as well, and volume price analysis that goes without saying. I think you've seen all these before. This is the current cryptocurrency strength indicator, which is proving very popular. This is our radar panel, which we developed for TradingView. So let's slide that out the way. Let's just go and see what's happening in terms of cable. Nice volatility candle there on the 15-second chart. And as Euro Aussie is taking off nicely, you can see here, let's just go over the multiples. This is what's going on. This is on the 10-minute, so you can see why. This is the strength of buying on the euro. We've done a few little changes here on the currency strength indicator as well. You've got these little tags on the end now, so you don't have to worry about remembering which is which. It actually tells you down the side here if you want that. I've got a feeling you can switch that off. There are a lot of changes going on, but this is the buying on the euro. We head over onto the multiple CSIs, got them somewhere or the other. There we go. This is on 1 minute, this is on 3 minute, this is on 5 minute, and this is on 10. You can see how strong it is. The euro here is absolutely roaring up for whatever reason. I couldn't care less why, whether it's on fundamentals, whether someone said something, whatever it is, the fact of the matter is it's rising very nicely indeed. And the reason that the euro dollar is not, the greatest is because the dollar has taken off as well. That is also rising strongly. So euro dollar is not going to be a great trade because the euro and the dollar are moving the same direction. And all that means is, and again, I'm sure you've heard this analogy many times before, 2 trains leaving the station at pretty similar times. They're both traveling in the same direction. There may be some differential speed between the two of them. In other words, a minor trend, but it's not going to be as strong as a train that's leaving the station up to full speed and one coming in the opposite direction at full speed. Those two, in that case, you're going to have very strong selling in one, very strong buying in the other. And those are the ones you're always looking for. The reason Anna's Euro Aussie has taken off because the Aussie was up at the top here, overbought, and many of you know, I'll always be looking down the tops and bottoms. I'm always searching out these, whatever time frame I'm looking at. The Aussie is very heavily, or was heavily overbought, is now rolling over on all time frames, getting down to the bottom here on 1 minute, and the euro is rising very nicely, continuing to rise, but getting up into overbought. So it's always a question of what time frame are you on. Are you on the 10, 15, 20 minute, 30 minute, or are you down here scalping? Because if you're down here scalping, you might well be looking at a rollover in euro. Euro Aussie takes some pips on the reversal. That's what it's all about. Let's just go back onto currency pairs multiple. Oops. Yeah. Sure. Okay. Can I pass back to you? Yep.
We talked when we're looking at the euro Aussie, we're obviously looking at entries using the Renko how the time chart had signaled this potential setup, and then we looked at levels and where it was likely to pause. And I said on the hourly chart, on the daily, we have this S3, which could cause it to pause. In fact, it's, as you can see here on the hour, it's actually gone straight through very nicely, but we're not at the top of the hour yet, so there's still time for it to pull back from there. What was giving us confidence was that yesterday it did actually break through this S3, so it's not the first time that it's approaching this level. So hope with but that would give us more confidence, to suggest that this is going to hold up, as it were. But the next question is, depending on the time that you want to stay in the market, so are you a very short-term trader or a medium, however you define those terms, is you're going to have to look at maybe getting out. And this little trade is, I think, is a perfect example of not to use a fixed ratio, saying, well, I'm a one, whatever the ratio is, as it were, but actually allow the chart to make the decision for you. Because if you use a fixed ratio, while on the surface it seems logical, maybe even comforting. You think, oh yeah, as long as I find trades where I make 10 pips or, or 12 pips or 15 pips, it sounds on the surface very sensible and easier to manage in terms of emotion. But actually, I think, what about if you only get to 9? And what about if what happens is when you set yourself a level, you're always, your brain is always saying, oh gosh, it's almost don't you think you ought to come out because you don't want to lose it? It might not get to 10 if you use a fixed amount. Whereas if you use the chart and the levels you see on the chart, that could be 10, but it could equally be 20, it could equally be 15. You don't read about it so much these days, but when we sort of started, we used to read that, as a scalp, the average scalp, if you like, the average time a short-term trader stayed in a position was something like 5 pips, David? Yeah. It was 5. It was ludicrously small, and whilst 5 pips is not to be sniffed at if you are trading big size, of course, because it's, you've also got to look at position sizes. And certainly when you're starting 5 pips, it may be that's great. You recognized an opportunity, and that opportunity delivered 5 pips. Fine, but that is based on what the charts are telling you. So what I'm trying to highlight here is, if you are very fixed on ratios, try allowing the chart to let you know, to tell you when it is likely to pause or reverse. As I said, the S3 on the hour, as I said, it's a strong level. Levels on slower time frames take precedence, and that would have been perfectly fine. You would have said, yeah, you would have, maybe just a few pips. But the fact is, having the Renko held you in. So, the faster time frame kind of helped you to say, look, hey, don't panic. You can actually stay in. But we are coming up to, certainly on the 15-minute chart, we're coming back to the volume point of control. And this is, in a way, more significant, because if you look over to the left here, it has actually, we have a congestion phase on this time frame, and you can see here depending on where you got in earlier on, you could say, I'm quite happy with what this has delivered, whatever that is. And do you know what, I think it is probably going to pause here because of the congestion that I've got on this chart. You look at the volume down here, it's certainly on these 2 candles it's been rising, but as I said, all the time that may rise. Depends how this candle ends. If this ends with a deep wick, then you are seeing some selling coming in. And you also have to remember these levels. Our levels are very precise. They are pinpoint precise. So you're always going to get odd numbers, as it were. But whenever a price action is coming up to a 0 or a 5, those are the levels that will have standing buys and sells, and they will also have an impact on the price action. So we've got through the S1. That's good. The euro is still rising. It's still, the Aussie is still falling. I suspect if we go down to the 5-minute chart, yes, you will see this is what we're seeing at the moment. We're actually seeing a little sort of turn down in the euro, but let's stick to the 15-minute and the Renko. If it gets through here, if it gets through this volume point of control on the 15-minute chart, what is the next, if you like, a big level? And given that the R3 and the S3, the third level of the Camarilla, are just they just work so beautifully. They're almost magical in a way. If this is going to carry on higher, it would be great if it could get to the R3. And look at the number of pips that you would have gleaned from the S3 to the R3. It's not going to be, a ride higher is never easy. It's can always be a little bit labored. We know the potential pause points, the potential points on the chart where it may even reverse, and you get a secondary trend lower, and then your VPA will come in again, because what you will look at, you will see, well, does the volume support the price action? And what's interesting with the two candles that are forming at the moment, you look at benchmarking. If you've got narrow candles with a lot of volume underneath it, well, that's anomalous. So it kind of price is holding up, and you think, and if you own, and this is also a case for not using just one time frame, because this is a 5-minute chart, and you look at this price action, you say, well, what's going on here? It's sort of it's in a bit of, I don't see anything of significance to show this pullback on this particular time frame. But it's when you go up to the 15-minute chart where you see, hey, you've got the volume point of control. That is what is holding things up at the moment, and it's quite a strong because you have you have this congestion further over on the left hand side. I would, again, you just look at the Renko chart. With exits, with the Renko is great for, as I said, for entries and for holding. But for exits, I always say consider the time frame chart more than the Renko. But certainly you just have to keep an eye on both, and the levels on the hour and the daily, and obviously your indicators here will tell you, will also give you some will support what you're seeing on the chart. Where is the Euro Aussie on this on the matrix? Well, as I said, the Euro CAD, very similar price action. I had a quick look at the Euro CAD to the Euro Aussie. Euro New Zealand kind of catching up a bit, but it's, if you look at the chart, you'll see why it's much more labored. Prices going higher are always labored. Falling, they always fall much more quickly. But a really interesting exercise today in all the aspects of VPA, and also how you use the indicators to we developed the indicators to support the methodology. There is a reason for all these indicators, and they're there to help. But everyone starts with the price action and the volume and the support and resistance. Okay. That's me. Can I pass back to you? Is that okay? I'll pass back to David. If you've got any questions, not sure I mentioned it earlier, just pop them into the chat box, or you can email us, david@quantumtrading.com or anna@annacooling.com. So I'm done now for the day. And well, not done for the day, done with this webinar. I'm going to keep an eye on the Euro Aussie. Do keep an eye on it. Please People ask us, well, why don't you, show where we get in and when we get out? Well, we have to be really careful. First of all, not to contravene all sorts of regulations that we are bound by. We can show you examples, and by all means go and have a look at the chart for yourself. Based on what I've said, where is this piece of price action actually going to stop? Where is it going to reverse? And and that's how we learn. With people teaching you what we want to pass on what we know, and hopefully help you become a more consistent and profitable trader.
Back with me. Just move the chat box out of the way. Hopefully you can see my screen. I've got the euro dollar up here just to really make the point I was talking about earlier on. Just pull this over here. You've got the euro rising, you've got the dollar rising nicely. Is it the best trade to be in? No, you can see it down here. It's on 5 minutes moving sideways. It's really not where you want to be. But certainly in terms of the other pairs, opportunities, you've got Euro Aussie, which Anna was looking at. You've got the dollar here, you've got Aussie dollar, you've got probably New Zealand dollar rolling over. You've got cable, which is moving nicely as well. And one of the great thing with whatever you're using with stocks, you're dealing with a huge amount of data. You're dealing with 10,000, 15,000 stocks if you're trading all the various markets in the US. In terms of Forex, it's much more straightforward in a way, because you're dealing with these primary 28 pairs down here. I've set up this little yen complex down here. I've got the indicators on here, which is what we're working on NinjaTrader to develop something similar. Oh, just before I forget, let me just go back to Ninja 8. There's a lot of new stuff coming on Ninja 8, which you may or may not be aware of if you're on Ninja. But one of the nice things, you've got FX correlation down here. You've got dynamic DOMs, static DOMs. You've got options on here as well. You can put up the option chain. But I just wanted to show you this in terms of FX correlation. Just really, again, to just get that out of the way, really just to make the point that when you're trading a basket, it's not a case of everything is in pure correlation. In other words, it correlates perfectly 1 or inversely -1. Anything above, I would say somewhere between 0.8, 0.85, you can say, yeah, that's a decent correlation. Anything below sort of 0.8, you can say, well, yeah, kind of, but it's not really very strong. And if you look at just taking the dollar pairs, for example, you take the Aussie dollar, does it correlate strongly with cable? And the answer is no, it doesn't. It doesn't mean a great deal. The same with dollar CAD. You look at dollar Swiss, dollar yen. So when you look at these pairs, you look at cable, what does it correlate with most strongly? Does it correlate with dollar CAD? Reasonably, 0.84, inversely well with dollar Swiss, but with euro dollar, no, nothing really. And the same is true. You look at all the others as well. So when you're trading a basket, the point is this: you just got to be aware of that fact that not everything is going to go up and down symmetrically. It's not going to go up, all rise and all fall at the same rate. Some will rise faster, some will go in congestion. There's all sorts, and you'll also see rotation. The other thing is when you've got a basket on, you will see rotation of buying or selling a currency moving from one pair into another. So I've got the radar screen set up here. I've got the trend monitor on here. I've got the trend dots on here, and I've got the volatility on here. And you can just whiz down here. You can see on New Zealand dollar, for example, this is only on 5 minute, but you could have multiples of these set up. We had one 4 bars ago. So if we click on that, go and investigate that. Why do we have volatility? There we are. That's on the 5 minute. Just pop that up full size really quick. What are you looking for? Well, you're looking for congestion or possible reversal. It just gives you so much speed to get around the charts. It also gives you, when you look at it in this sense, when you have a matrix set up like this, if it's all blue or it's all red, in other words, all consistent, it also tells you what is going on across the complex in terms of, back to the river of flow analogy. You can see here, for example, the Aussie yen, for whatever reason, on 3 minute, is not really as consistent as it is on Swiss yen, for example, or on pound yen. Pound yen's just starting to rotate. New Zealand yen, they are all pretty consistent, but the Aussie yen at the moment is a standout inconsistent on that particular matrix. And you can do the same with very simply with charts, with futures where it's all dollar based, and you can set up a matrix, a dollar matrix, where you've got the 6 or 7 charts there, and you can see instantly across the time frames. And on Ninja, of course, you can link them. You can link them, time link them, so you can just whiz through very quickly in that way. There we are. We are going to have to run. Let's just pull this up as we just wrap up. This is the Quantum Trading Education Program. I know we've got quite a few students on the call with us this morning, so nice to have you here. It's called the Complete Forex Trading Program because it is exactly that. It tells you and teaches you everything you need to know to trade the Forex market with confidence, to start building that confidence, the confidence you saw on the little mini account there. Consistency, it is all about consistency, because once you've found consistency, that is the key to success. Because whether you're doing it on a micro lot or a mini lot or multiples of mini lot or full lot or multiples of full lots, you're doing the same thing. It's rinse and repeat. That's all you are doing. And all you're doing in stepping up is just creating larger and larger order size and making more and more profitable. That's all it's about. It's really about nothing else. As we say in the program, when you start, it's not about making money. It's about consistency. It's about defining what your target is. You're going to have a target of a certain number of pips a week, or preferably a month, which will even out the ups and downs. And you then base your success on that. Excuse me. Hold on a moment. So it's finding that consistency, and that's what it's about. And this is what the program will teach you. You've got the 5 modules here. You've got psychology, fundamental, relational, technical, and mechanics. We always get questions about where do I start. We always recommend you start with the psychology of trading module. There are 8 associated PDF downloads which go with it. There are another 5 which cover the other modules as well. But that's where we recommend you start, because if you understand yourself, you will give yourself so much better chance of succeeding in this business and basically tailoring what it is to suit your personality. That is the key. Reading a chart, everybody can read a chart, everybody can understand VPA, everyone can understand relational, everyone can understand technical and how to trade. But if you understand yourself and you tailor it accordingly, then you will be so much more successful, I can assure you. You've got all this other stuff down here. In total, it represents around 450 modules, and I think there are 250 to 300 hours of video. It's huge. And then, of course, you've got the VPA trade room down here, the chat room, which is supported by Anna and myself, where you'll meet other students. They post what they're doing, and we answer questions if you've got a question on the program. We bolted the funded Forex program on last year, which has been, again, hugely successful, taken up by a lot of students. You are basically trading our money up to $2 million. It's not your money, it's our money. Yes, there are risk and money management rules, of course there are, but the only entry ticket you have to pay is down at the bottom here, which is for a $5,000 valuation account, a $10,000 or a $15,000. That's the cost of entry down the bottom here. That's all you pay. Once you're in and you have your live account funded with our capital, that's it. You can't lose anything else. As I say, there are all the risk and money management rules in there. You decide which level you want to start at. Do you want to start with a $5,000, $10,000 or $15,000 account? We set a very simple profit target for you to achieve. You can only trade the 28 currency pairs in that particular level, but you're looking for consistency. We are looking at you for consistency. From our side, you are proving to yourself that you have that consistency to succeed. Once you've hit that simple profit target, we give you 35% of it back as a bonus. You then move up to the next level where basically you can trade other markets, you can trade indices, and you can trade gold in addition to the currency pairs. And we also multiply the capital by a factor of 4, depending on where you started. So if you started at 15,000, we give you 60,000 of our money to trade, and on up the chain. And then we double it thereafter. So we go 60,000, 120, 40, right the way through to $2 million. And as you're trading, once you go up to what we call the portfolio manager level here, once you're on those levels right the way through, we reward you with 50% of the profits you make, and you can draw that off whenever you like every month, or you can leave it in the pot to grow. It's entirely up to you. And that goes right the way through up to, once you hit the 1 million level, then you start to earn at 60% profit kickback at those upper levels. So that's the funded program, and the reason we bolted on was twofold. First of all, to give our students the opportunity to trade much larger capital size at no risk, but also to put that knowledge to use in terms of profitable trading. So you've actually got a vehicle. It is an extension of the program. It's a natural extension by once you've got all this knowledge and you've got that consistency, well, put it to good use and put it into the funded program at our risk. This is where you'll find all the indicators at quantumtrading.com, Tradestation, TradingView, NinjaTrader 78, MT45. This is where we're concentrating at the moment on NinjaTrader, as I've explained. There's a lot of work going on behind the scenes in terms of the indicators, in terms of market analyzer. There's a lot of good things coming out of Ninja as well on NinjaTrader 8, as I've just shown you on those new features coming in. And that's where we'll be basing much of the stock trading program that we will be building next year around the NinjaTrader platform as well, with new indicators. If you've got one indicator from us, if you've bought, it doesn't matter, I said this last night, if you bought 10 years ago, and we have customers 10 years old, believe it or not, 10 years old themselves, but they've been with us for 10 years, we give you a credit. If you've bought one indicator and you want to upgrade to a package, or you want to upgrade to an education program, whatever it may be, we will always give you a full credit, whatever it is, no matter when that order was placed with us, no matter how long ago. If you invest in the full package, of course, then you get the benefit also of us giving you all other indicators we develop for that platform free of charge. And we have a lot of customers who've done that over the years, and they've benefited hugely from that. So that's all the platforms at the moment. And finally, you'll find Anna's analysis over at annacooling.com, all the books up on Amazon in both Kindle and paperback, selling extremely well. We created all these box sets, I think, 2 years ago. They're also going well. Trading cryptocurrencies is picking up a lot of interest too, using volume price analysis to trade the crypto markets, which is wonderful. That's it, I'm done. Thank you very much indeed for coming along today. Hope you've enjoyed it. Enjoy the rest of the trading day. Stay safe, stay well. We will see you again next week. So have a great weekend. Thanks for coming along today. See you soon, and bye for now.